What if I told you McDonald's doesn't make most of its money from burgers? You might think it's all about flipping patties and selling Happy Meals. But the real secret behind McDonald's fortune has nothing to do with food. It has everything to do with something far bigger. Let's dive into today's story. Welcome back to WildPadX, Tony here. Today is 19th of March 2025. Here on this channel we break down everything related to money, investing, crypto, and psychology. So if you want to stay ahead in finance, be sure to subscribe. Let us first take a quick look at today's market update. Begin with crypto. Bitcoin is still currently trading at $83,000 and Ethereum stands at $1,900. And over in the stock market, Tesla's share has experienced a significant decline recently and further dropping over 5% to now $225. This marks a more than 40% decrease year to date, influenced by Elon's political involvement and factors such as competition from the Chinese electric vehicle maker BYD and skeptical Wall Street analysis. And the company we're talking about today, McDonald's, is currently trading at $303. During volatile time like this, whether you're investing in stock or crypto, it's essential to maintain a strong investment mindset. If you started buying Bitcoin at over $10,000, you might be seeing a 20% or even 30% loss on paper. However, the longer you employ the dollar cost averaging strategy into Bitcoin or any other quality asset, the lower chance of a paper loss. Remember, patience and consistent is always key in long-term investing. Let's get into today's morning deep dive. Today we're talking about McDonald's, the place where you grab a Big Mac when you're too lazy to cook. But here's something that might blow your mind. McDonald's isn't really in the burger business, it's in the real estate business. Think about it, no matter where you go, New York, London, Tokyo, or even a random service station, there's a McDonald's sitting right there, perfectly positioned, often on some of the most expensive land in the area. And that's no accident. While McDonald's sells billions of fries, its real secret weapon is owning prime real estate and collecting rent from franchises. Let's rewind a little. It's the 1950s, and Ray Kroc, a milkshake machine salesman, stumbled upon a small but wildly efficient burger stand in California. He convinced them to franchise it, and in 1955, the first McDonald's franchise opens. But here's the thing, Kroc quickly realizes flipping burgers isn't where the real money is. It's in fact owning the land those burgers are flipped on. That's when McDonald's made a game-changing move. Instead of just letting people open franchises everywhere, McDonald's just bought the land, built the restaurant, and leased them out. Instead of making money from just burger, they start making money from rent. And it's not just a little rent, it's a lot. McDonald's charges franchises not only in a fixed rental fee, but also have a cut of their monthly sale. In this way, whether franchises does well or not, McDonald's always get paid. And the crazy thing is that McDonald's doesn't just own a handful of properties. It owns tens of billions of dollars worth of real estate across over 100 countries. And very often they're in prime locations. In 2023 alone, McDonald's pulled in $9.7 billion from rent and royalties. That's not from flipping patties, not from supersizing meals, but from rent. This is why McDonald's is so much more resilient than other fast food chains. Let's say a bad year hits, maybe people ditched fast food for some new trendy diet. The franchises suffer, but McDonald's, they still collect the rent. In fact, they raise rent over time. And if a franchisee fails, McDonald's just replaces them with somebody else who can pay. Now let's step back. Imagine you could follow McDonald's strategy instead of just running a business. What if you also owned the property it operated from? You'd have two income streams, the business itself and the rent from whoever is using the space. That's how McDonald's becomes a money printing machine, by thinking long term and owning appreciating asset instead of just selling products. And cash flow is a single reason why McDonald's can afford to buy all this real estate. We've explained in previous video that how Robert Kiyosaki explained cash flow in his book Rich Dad Poor Dad. Every McDonald's restaurant makes money every single day. And that money is reinvested into buying more land. That is exactly what wealthy individuals do when they buy rental properties. Is what smart investors do when they take their profit and reinvest them into something else. Money should always be working for you, not just sitting around. Now let us compare McDonald's to some of the biggest companies today. Last year in 2024, McDonald's reported an operation margin of 45%. That is higher than Tesla, Apple, and Netflix. Let that sink in. While Tesla is trying to sell electric cars, and Apple is trying to convince you to upgrade your iPhone for the 50th time, and Netflix is spending billions producing new shows, McDonald's is just sitting back, collecting rent, and flipping real estate like a property tycoon. And that's why McDonald's business model is one of the greatest of all time. Whether you like it or not, it's not about what they sell, it's about where they sell it. Burgers are just a tool to fund a real estate empire. So what's our takeaway here? It's simple. It's to own things that appreciate over time. Whether it's stock, real estate, Bitcoin, the key is to think like an investor, not just a consumer. Because after watching today's video, you understand that every single time you buy a McDonald's meal, you're contributing to somebody else's real estate portfolio. And Whale Crew, the question for you is, when will you start building your own portfolio? Now let's get into today's top news. The first news. Kimball Musk, Elon's brother, offloaded over $27 million worth of Tesla share. And also the chairman of the board, Robin Denholm, sold over $74 million worth. Analysts are suggesting that these sales don't necessarily indicate a negative outlook, but it could potentially mean that these insiders believe the stock is at a fair price or potentially overvalued. What do you think? Share your thought in the comments below. The second news, Paul Hawkins, nominated by President Donald Trump back in December, has faced delay in his confirmation as SEC chair. It appears that his Senate committee hearing is finally scheduled for the end of March. If all goes smoothly, Paul Hawkins will assume the role soon. The third news, a Bitcoin whale leveraged a 40 times short position, pocketing $9 million in just 8 days. Does he know something that we don't, or is he simply a high-stake gambler? With the FOMC meeting happening today, we're likely to see extreme volatility in the crypto space today. We're likely to see a lot of liquidation. And with all these bearish sentiment recently, if Jerome Powell didn't make any statement out of the ordinary, we should be able to see a good rebound for crypto. But again, don't trade with leverage. Best if you don't trade at all. That's a wrap for today's episode. Please subscribe for daily updates in weekdays. Stay invested, and I'll see you tomorrow.